Welcome back. You're watching The Money Show, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? Now, to help you navigate through this maze, today I have with me Pankaj Mathpal, MD of My Money Managers, and also do not forget to send across your questions on our WhatsApp number, which is 865-797-4571. You can also email us your questions on themoneyshow@etnow.tv. Hi, good evening, Pankaj, and welcome to The Money Show. And let's begin with our viewer queries. Mr. H.R. Kamath has sent across his question via email, and he is unable to prematurely cancel his SIP in Canarabeco, FlexiCap and ICICI Pru Blue Chip Fund. HDF Security is his demat account provider, and so he must have had a word with the platform. And they said that there has been some technical problem with the BSE through which the SIP was started, and he wants your help in order to understand how can he go ahead in this particular case. So first, what kind of a problem is he talking about that the brokers have informed him, where he can't cancel his SIPs? And second, how can he now directly get in touch with the fund houses?
Kavita, good evening. See what information he has shared. He has now his demat account with HDFC Securities, but these funds have been bought through BSC Star. When he's saying BSC, it means BSC has a mutual fund platform called BSC Star MF. So it's very simple. Instead of approaching to the demat Miss DP, HDFC Securities, he can log into bscstarmf.in. That is the website for that, or he can download BSC Star MF app on his mobile, and directly from there he can cancel SIPs, and even he can withdraw his units. If the units are in demat form, then he will have to redeem through broker. Otherwise, he can redeem directly from the BSC Star platform.
All right, we don't have him on the phone line, and I hope this is the route that he can actually follow. Let's move on and let's take Pallavi's question. Pallavi says that she's investing 10,000 by SIPs in mutual fund. She has SBI Small Cap, UTI Nifty 50 Index and HDFC Flexi Cap. She wants to know if these funds are good to continue for 20 years. So I don't have much information as to what's the corpus that she wants to accumulate and what's the financial goal attached to this portfolio. It's always advisable for any investor to have a particular financial goal and investment strategy attached to that goal. But in this case, we just have the information of the funds and the time horizon, which is 20 years. So your suggestion on the fund mix?
Kavita, all the funds are good, but you can see one is large cap, one is flexi cap, and flexi cap fund also has large exposure in large cap only, and one is small cap. It means mid cap is means there is a lesser exposure to mid cap. So my suggestion here, to balance the portfolio, if Pallavi can switch from HDFC Flexi Cap Fund to HDFC Mid Cap Opportunities Fund, that will make her portfolio better. Means there will be exposure to large cap, mid cap, small cap. It will be well diversified portfolio. Or otherwise, Miss Pallavi has one more choice. If Pallavi you want to add new fund, then Motilal Oswal Mid Cap Fund is also in this category. If you want to keep two fund of different AMCs, so that another choice. So I have suggested two mid-cap schemes, any one you can pick.
All right, and talking about HDFC Flexi Cap, even if it's a Flexi Cap fund, the bias is more towards large cap, which is why you specifically recommended a mid-cap fund to her?
Because she has one large cap fund in her portfolio, and on top of that, she has Flexi Cap, which has again major exposure in large cap only. So it means her portfolio has tilted toward the large cap only, and mid cap is missing there. So that's why I recommended her to add mid cap to her portfolio.
Although a time horizon is 20 years, and it's very nice when an investor comes with that kind of a dedication towards the portfolio of being invested for 20 years. But 20 years, Pankaj, is a very long time. What all do you need to factor in as far as your selected funds are confirmed? You have to look at their performance. You have to look at the kind of changes the fund manager is making, or there are any internal changes in the fund management team as well. To hold on to a fund for 20 years, it's quite an art for an investor to understand, but what all do you factor in when you are in for such a long period of time?
Kavita, equities for long term, but does not mean that you have to stick to those funds only always. See, when you invest, you have a allocation based on your goals, that how much you will keep in large cap, how much mid cap, how much small cap. And that time you choose the funds which are promising. But after, because we review the portfolio regularly, so if you realize that after 1 year schemes are not performing, or there is another reason to switch from those scheme, maybe the financial attributes have changed of their schemes, or fund managers have changed. There can be certain reasons for that. So when you start, that time you decide based on your goal how much allocation will be in which kind of assets and schemes, and choose the best schemes which are promising, not only the past performance, but based on your risk appetite, goal, etc., and their portfolio, you should select the schemes. After that, after 1 year, 2 year, when you realize that schemes are not performing well, you need to change. You can keep you can make changes in that. So when we say equities for long term, does not mean that you have to stick to one scheme only if required. If the scheme is performing well, you can stay invested for 20 years also. But if it is not meeting the objective of your investment, or any other reason that you are not satisfied, you can change the schemes in your portfolio.
Perfect. Let's move on to Manav's question, and he wishes to invest 25 lakhs in mutual fund for long term. 12 to 15% is what his return expectation is for 10 to 15 years, and the goal is retirement. And he has already invested 30 lakhs in flexi cap and multi cap funds. We don't have the name, but he further wants to invest 25 lakhs for long term.
See, again, the horizon is quite good, 10 to 15 years. And again, miss, we don't know the risk appetite, etc. But considering the long investment horizon, I'll suggest that he can invest in large cap, large and mid cap funds, etc. So because multi cap is already there, has informed us. My suggestion that one large and mid cap fund can be added. So ICICI Prudential large and mid cap, or Motilal Oswal large and mid cap, or both the schemes. So you decide, because the amount is if 25, 30 lakh. So two schemes can be there, but for long-term horizon, diversified fund will be a good choice.
All right. So you are recommending ICICI Pru large and mid cap and Motilal Oswal large and mid cap to Manav?
Yes, these both the schemes are very promising portfolios. These schemes have. One is if you talk about Motilal Oswal large and mid cap, it has a focused approach, and ICICI Prudential large and mid cap is well diversified. So if you want to keep two schemes, then also it can make a good combination.
But then how should he be investing 25 lakhs in a staggered way?
Yes.
How can he design that investment strategy?
Yes, that is very important at this moment, because when the election results are due, I'll say that he should not wait for very long, but in staggered manner. So within a month, you can invest this whole amount. There are two choices. Either he can invest 5 lakh every day, something like this, whole 30 lakh in few sessions, or otherwise another choice is that STP, you park this money in some overnight fund or ultra short duration fund, and from there you can start STP. So within a 1 month, you should invest this complete amount in equity schemes.
Can he also add a multi-asset allocation fund, and maybe the staggering can take a lot of time. He can take as much time as he wants. But do you think at this point in time, where we are seeing across asset classes, the rally is really good? You know, Pankaj, we talk about debt, we talk about equity, we talk about gold, commodities also. We don't have any red flags so far. So do you think a multi-asset can be a part of your portfolio?
Agree with you, Kavita, multi-asset, which has equity, debt, and gold, etc. in the portfolio. But because he has mentioned clearly 10 to 15 years investment horizon, second thing he had mentioned, his expectation is 12% to 15% CAGR basis. So based on his expectation and investment horizon, I have suggested. But yes, I agree with you. If he wants to invest at this moment in hybrid funds, means multi-asset allocation, and after 1 year, 2 year later, he can switch to equity funds for long term. That can also be a good idea, because for long term, I will not suggest anybody to invest in debt. But yes, at this moment, when we are seeing that equity valuations are also expensive, and somebody wants to take this call, it is a good idea that you can invest for the moment in this kind of fund later, but you should switch to equity funds for long term for better returns.
Move on to our last question. Nikita, she writes that she's currently investing in 3 funds, 30,000 rupees SIP per month. Parag Parikh Flexi Cap, HDFC Nifty 50 Index, and HDFC Balance Advantage Fund. And she wants to know if the choice of fund is good, and she wants to achieve 2 to 2.5 crores in 7 to 10 years.
Kavita, here see, funds are good again, but if you're talking about such long term and your goal is also quite big, I'll say that HDFC Balance Advantage Fund doesn't suit you. So you should consider switching from this fund to HDFC Mid Cap Opportunity Fund in the same fund house if you want to stay. Or otherwise, Motilal Oswal Mid Cap Fund is a fund of my choice in this category. So both the funds are good, but you should switch to Mid Cap Fund for such long investment horizon. Second thing, as far as goal is concerned, with the 30,000 per month at 12%, I have calculated, and which comes to 67 lakh in 10 years. So my suggestion that if you want to 2.5 crore, you will have to double your SIP now only. Along with that 10% step up, then it looks possible. So you see, if you can afford to increase your SIP right now, please go ahead. Otherwise, as soon as possible, you should increase your SIP amount and also step up year after year.
All right, with that, it's time up on the show. Thank you so much, Pankaj, for being on the show and helping our viewers with their financial portfolio queries. And just in case, if you too want to get your portfolio checked or have any goal-based question or any question regarding any particular investment instrument, you can send across your queries on our WhatsApp number, which is 865-797-4571, or you can email us your questions on themoneyshow@etnow.tv. That's all for today. Thank you so much for watching. Goodbye.